Imagine this. You open your trading app and see Opendoor tearing higher while most of the market is trying to catch its breath. It's up more than 3% on heavy volume, and there's no headline or SEC filing to explain it. What you're watching here is a classic market tug-of-war. Macro data pushing sentiment one way, and insider signals plus mortgage rate moves pulling in another. Stick with me, because over the next few minutes, I'll break down every single data point that matters and what it could mean for traders and investors. Quick reminder before we dive in. This video is educational and for entertainment only. It's not financial or legal advice. Do your own research before acting on anything I discuss. All right, let's get into the facts. Today, Opendoor jumped roughly 3%, trading around $7.78, swinging from about 7.41 cents up to 8.41. The real story is the volume, over 91 million shares traded today, compared with an average closer to 32 million. When volume triples like that, it usually means large, informed players are active, or algorithmic systems are piling in. Either way, it makes the stock very tradable in the short term. Now look at the macro side. The latest employment data came in weaker than expected. The ADP private payrolls print showed a decline. Weak jobs numbers are bad for workers, but they can push market expectations toward looser monetary policy. Right now, traders are pricing in increased odds of a Fed rate cut at the December meeting. If rate cut expectations rise, that's often favorable for companies that benefit from lower borrowing costs. And Opendoor is one of those companies because it's sensitive to mortgage rates and housing activity. And mortgage rates did move today. There was a notable decline in mortgage rates this morning, which is a positive signal for housing demand. Lower mortgage costs can improve affordability and potentially increase home turnover, which in theory helps Opendoor's core business. So between softer employment data and falling mortgage rates, the macro picture is tilted in Opendoor's favor at the moment. Now for the part that's got social feeds buzzing, a public statement from Opendoor's CEO indicating that he and his family plan to purchase stock, roughly a $1 million commitment at the open, according to his post. That sentence alone has traders speculating and the price reacting. Important legal note here. An insider or executive saying they plan to buy shares is market moving, but it is not the same as a confirmed, completed trade. If an insider personally completes a trade, insiders typically file a Form 4 with the SEC within 2 business days of the transaction. If family members who are not insiders make purchases, the filing rules may differ. So while that social post is meaningful and market moving, it is not definitive proof of a completed insider purchase until the appropriate filings appear. We'll watch Edgar for any Form 4 to confirm. Again, not legal advice, just how the filing timeline generally works. Because Opendoor has stated that certain executive social accounts are official communication channels, posts from those accounts carry weight in the market. That said, it's still prudent to treat the post as a market signal, not absolute proof, and to wait for official filings for confirmation. Let's look at the short interest and options flow. Roughly 22.6% of the float is short. That's about 162 million shares shorted. That's a large short base. But interestingly, short sellers haven't been aggressively increasing positions recently. They've mostly held steady since early October. That could mean they're waiting for a clearer catalyst before adding exposure. Options activity today shows about $17 million in calls and $2.4 million in puts, with nearly 48% of option trades skewed bearish on balance. The bulls seem to be positioning for a move into the $9.10 area, while bears are protecting or betting on drops below roughly 750 cents. That dynamic is exactly what produces intense intraday volatility and makes this a very active tape for short-term traders. Institutional and block trades. We saw several large secondary market transactions. Examples included blocks around 4.8 Ming and 1.3 Ming dollars. There were also dark pool prints, including a 1.06 million share trade at $8.18. Dark pool activity is anonymous by design, so while one of those prints could be related to an insider or a large institution, we can't confirm identity from the print alone. The only way to verify an insider's personal transaction is the required SEC filing, if applicable. On the chart, key levels to watch. Short-term support sits near 807 cents, with secondary support around 748 cents. On the upside, immediate resistance is near 904 cents. Technically, Opendoor is trading above its 10-day and 50-day moving averages, a bullish sign for momentum traders after weeks of consolidation and a recent V-shaped recovery. But technicals can flip fast in a high volatility name, so use tight risk management if you trade intraday. Analyst outlook is mixed, but tilting positive. A couple of firms recently reiterated buy ratings in the low to mid single-digit price targets near $8, while other firms remain neutral or bearish with lower targets. One outlier put a price target well below current levels. That shows the range of opinions among sell-side analysts. The takeaway: analysts are not unanimous, and changes in macro data or insider confirmation can shift sentiment quickly. Institutional filings, 13Fs, show modest quarter-over-quarter increases in institutional ownership, about a 1.9% uptick recently, which indicates institutions are not shying away entirely. Names like large asset managers have been adjusting positions, which is something to monitor over the next reporting cycles. A few practical trading takeaways from today's action. If an official Form 4 is filed within the next 2 business days confirming an insider purchase, expect a renewed leg of momentum fueled by verified insider demand. If the Form 4 does not appear, or if the filing shows something different, like family members buying but not the insider, expect increased volatility and potential sharp short-term sell-offs as traders reprice the rumor. Keep an eye on mortgage rate data and Fed commentary. A surprise move in rate expectations will affect Opendoor quickly. Use well-defined stop losses and position sizing. This is a high volatility environment driven in part by algorithms and options flow. One more point. A lot of today's trading appears driven by algorithmic and AI trading systems. You can actually see quick spikes and reversals on intraday charts. When algos dominate, price moves can be exaggerated and short-lived, so be careful about chasing breakouts without confirmation. So where does that leave us? Opendoor's setup today is not random noise. It's the result of 3 converging forces: a meaningful social signal from an executive easing mortgage rates, and a macro environment that's starting to price in easier monetary policy. Any one of those elements changing can reverse the move, but together they're enough to justify the current level of investor interest. Final thought. If you're a trader, this is a stock to watch closely over the next few sessions, especially around any Form 4 filings or new macro headlines. If you're an investor with a longer time horizon, use the volatility to assess fundamentals and consider dollar-cost averaging rather than making impulsive trades off short-term noise. All right, that's the breakdown. What are you doing with Opendoor? Buying some into this rally, taking profits, or staying on the sidelines until filings and macros settle? Drop your thoughts below. I read the comments and will respond. This video is for educational and entertainment purposes only. It is not financial or legal advice. Always do your own research before making investment decisions.